Welcome to Financial Insights in Minutes, your go-to summary of the day's top real estate market videos. Today we delve into pressing questions. Is our economy on shaky ground?
We'll be breaking down valuable insights regarding interest rates and the shift towards a buyer's market.
And what role does cryptocurrency play in these turbulent times? Stay tuned for expert predictions.
Don't miss this critical financial review today. Your investment strategy might depend on it.
First, Stephan discusses the Federal Reserve's upcoming rate cut and its expected impact on the stock and housing markets. Next, Taggart raises alarming concerns about economic decline, the wealth gap, and rising homelessness in the U.S. Over at Reventure Consulting, discover Charleston, the cheapest city in America, battling economic woes despite its affordable homes. Then, Mitch reveals shocking economic fraud regarding property valuations that could be costing homeowners significantly. Jason Walter forecasts a moderated home price increase through 2025, indicating potential shifts in the housing market. Also, learn from James Darrer about how to build multiple income streams through real estate to weather economic storms. Ryan Scribner offers insights on 5 cryptocurrencies you might want to buy and hold for the long term amidst market fluctuations. Finally, dive into Jason Walter's analysis on the bumpy ride the current housing market is taking, impacting sellers and buyers alike. Ahoy, everyone. Welcome aboard to Stephan's channel. Today's hot topic, the Federal Reserve's upcoming rate cut and the potential impact on markets.
That's right. Stephan, a financial educator and expert in personal finance, is bringing us important insights on this pressing issue with a dash of humor.
So, what's the big takeaway from Graham's video? What should we really be paying attention to?
The core thesis revolves around the Federal Reserve hinting at a potential rate cut due to subsiding inflation, which could shake the stock and housing markets.
Let's break down the key points Graham discussed. First up, what's the scoop on inflation?
Inflation has risen by 20.8% since 2020. However, in June, prices actually fell for the first time since the pandemic, showing some positive trends.
Interesting. What about the political landscape's impact on the stock market?
Democratic administrations have historically favored stronger stock market performance, while Republicans can complicate things with tax cuts that might ignite an economic boom.
And how is the housing market behaving?
Housing prices have hit record highs, but are rising at the slowest pace since early this year, indicating a shift towards a buyer's market.
Now, what are the predictions Graham laid out?
A potential rate cut could arrive this September, the first in over 2 years, if inflation continues to show decline based on current data.
And what other forecasts were shared?
The conclusion suggests continued market volatility and a longer road to normalization, projecting a hovering rate around 3.1% by 2026.
To wrap things up, what should viewers take away?
Understanding the Federal Reserve's upcoming decisions regarding interest rates is crucial, as these will shape economic futures and investor opportunities.
Final thoughts on political influences.
Exactly. Recognize that political conditions heavily influence financial outcomes, particularly concerning the Federal Reserve's maneuvers.
Welcome to Sachs Realty's Tuesday Night Podcast. Today, we're diving deep into a pressing question. Is the U.S. really falling apart? Joining us today is Taggart, founder of Thoughtful Money and former Wall Street professional, ready to share his insights. Let's see what he's got.
Thank you. It's great to be back. I love engaging with this audience and discussing the topics that truly matter.
So Adam, what's our main takeaway from today's discussion?
We're seeing various indicators that America is on a declining path. Economically, socially, and culturally, there are big problems that need addressing.
Let's get into the key points. What do we know about homelessness?
A shocking trend is that homelessness is rising among people with jobs. Many workers, including managers and tradespeople, are unable to afford housing.
What about shoplifting statistics?
Shoplifting has increased significantly, up 24% this year. This trend reveals underlying economic challenges, especially for lower-income individuals.
And what about the wealth divide?
The wealth disparity is growing, and many people, including those with stable jobs, can't manage basic living costs. It's creating a social burden.
What predictions are emerging from these issues?
If things continue on this trajectory, The wealth divide could spark social unrest. We could see increased instability in the economy.
And what about the aging population?
As baby boomers retire or pass away, there will be significant impacts on the housing market, as many homes will be sold off.
So, what's the takeaway?
We need to come together as a society to tackle these challenging issues. Critical thinking and unity will guide us forward.
Any final thoughts?
Investing in education and community support will help us rebuild a more equitable society moving forward.
Welcome to Reventure Consulting on YouTube. Today's voyage takes us to Charleston, West Virginia, the cheapest city in America to buy a house, where homes can go for as low as $50,000.
That's right. Nick dives into the realities of this city, exploring why it's both one of the cheapest and one of the poorest municipalities in the country. An eye-opening journey awaits.
So, what's the main point of this adventure? Why are houses so cheap in Charleston?
The core thesis reveals that while housing is extraordinarily affordable in Charleston, the city grapples with a struggling economy, an aging population, and declining job opportunities, creating a complex housing market.
Let's dive into those key points about home prices. What's the scoop?
In Charleston, homes typically sell for less than $140,000. Believe it or not, you can find 3-bedroom houses for as low as $50,000 to $85,000.
And what's the job situation like there?
The median household income hovers just above $50,000, severely impacted by a coal industry downturn. Over the past 2 decades, coal production has plummeted nearly 50%.
How about renting in Charleston? What's the story there?
Rentals can be secured for under $1,000 a month. Surprisingly, even with affordable housing, homelessness is a notable issue here.
Wow, that's a drastic drop. What does this mean for the market?
Indeed, the population decline of about 41% leads to excess inventory, pushing down prices and making homes more affordable, but also highlighting economic challenges.
That sounds alarming. How does drug-related issues play a part here?
West Virginia's staggering drug overdose rate stands at 90 per 100,000 people. This crisis is a contributing factor to the region's economic difficulties and housing market issues.
So, what does the future hold for Charleston's housing market?
The ongoing excess inventory, combined with a shrinking population, suggests that home prices may stay low in the foreseeable future.
Are there any upsides for potential home buyers?
Definitely. Remote workers and retirees might discover that affordability and low property taxes in Charleston are quite inviting.
To wrap things up, what do we glean from Charleston's housing scenario?
Charleston paints a paradoxical picture. While it offers affordable housing, it's crucial to understand the underlying socioeconomic challenges that contribute to this rarity. It's a complex landscape for sure.
Any final thoughts on whether someone should consider moving there?
Affordability could be incredibly appealing to some, but deeper issues like the economy, population decline, and drug crisis still persist. Potential buyers need to weigh the pros and cons carefully.
Welcome to Real Estate Mindset. Today's topic, a bombshell expose on economic fraud that's shaking the foundation of property valuations. Joining us is Mitch, a savior in our community whose insights will blow your mind.
Absolutely. Mitch has quickly changed the game in understanding property valuation fraud, shedding light on some shocking truths that extend far beyond Texas. Buckle up, everyone.
What's the main thesis we're working with today? What has Mitch uncovered?
The core thesis is that systemic valuation fraud runs rampant in appraisal districts nationwide, not just in Denton County. This fraud is leading to massive overtaxation and harms countless homeowners.
Let's dive into the key points, starting with overvaluations. What's Mitch got for us?
Mitch illustrates how properties are listed at prices much lower than assessed values, highlighting shocking overvaluations of 19% to 32% in Harris County alone.
And what about appraisal districts? What's their role in this mess?
Appraisal districts are using inflated criteria, blatantly ignoring market realities. When homeowners protest, they find there's often no path to recourse for their overtaxation.
Mitch seems to have plenty of evidence. What's he got?
Indeed, he shares links to documented instances of fraud and offers tools to help homeowners identify corrupt practices in their districts.
A call to action is always inspiring. What's Mitch rallying for?
Mitch emphasizes that community engagement is key. Filing lawsuits and advocating for fair taxation can bring about real change.
What are Mitch's predictions for the future?
He predicts that with growing awareness, there's potential for new legislation to reform property tax practices, promoting much-needed transparency in appraisal processes.
And beyond legislation,
We'll see more people standing up and filing protests and lawsuits. A united community can challenge these practices effectively.
to wrap it all up, what are Mitch's major takeaways?
Mitch emphasizes that awareness is power. Homeowners must band together to fight against appraisal fraud and reclaim their financial rights. Taking action is imperative.
Any final thoughts?
Absolutely. Unity and persistence in the face of injustice can create real change. Let's encourage folks to take part in the movement.
Ahoy, and welcome back to Jason Walters' channel. Today, we're setting sail into the intriguing forecast for the U.S. housing market through 2025.
That's right. Jason dives into Fannie Mae's latest predictions regarding housing starts, sales, mortgage rates, and home prices. It's time to unpack this treasure chest of information.
Let's kick things off. What's the main thesis from today's forecast?
Fannie Mae forecasts that home prices will continue to rise, but at a moderated rate. With growing inventory and affordability pressures, home price growth is expected to decelerate by 2025.
What are the figures for home price growth?
Home price growth is expected at 6.1% for 2024, decreasing to 3% by 2025. Growth is still anticipated, but slower than before.
And what about inventory?
Housing inventory levels soared more than 30% compared to last year, but home sales took a hit, decreasing 5.4% in June.
Interesting disparities out there. What's happening regionally?
That's right, the Sun Belt is experiencing an inventory oversupply, with Austin seeing a 41% jump in listings since 2019. Meanwhile, northeastern markets are struggling with low inventory.
What's the outlook for new versus existing homes?
New home sales are projected to dive 4% next year, while existing home sales could grow by 1.9%, marking a shift.
Now, let's navigate through some predictions. What's in store?
Sales are likely to stay below long-term averages. However, home prices are expected to stabilize by 2025, hovering around historical norms.
To wrap it up, what's the big takeaway from this forecast?
The overall picture is clear. Moderated home prices combined with growing inventory, but regional disparities will continue to shape the housing landscape through 2025. It's a wild ride ahead.
What's Fannie Mae saying? It sounds like a lot to keep track of.
Absolutely. It's essential for home buyers and sellers alike to stay informed about these trends. Viewers, what do you think of the forecast? Comment below.
Welcome to the BiggerPockets Real Estate Podcast. Today's topic, how to build multiple streams of income through real estate like a pro. Joining us is James Darrer, a seasoned investor who's created an empire with 8 revenue streams. Get ready to learn the ropes.
Absolutely. James brings a wealth of experience. With a knack for identifying opportunities, he's here to share how different income streams can work together to boost your finances in real estate. Let's dive in.
So, what's the central message from James today?
The main takeaway is that diversifying income streams in real estate not only stabilizes revenue in fluctuating markets, but also ensures liquidity. James emphasizes that having various income sources acts as a safety net for any investor.
All right, let's unpack those key points. Why are multiple income streams so crucial?
It's all about stability. When the market fluctuates, having various streams, like flipping, lending, and property management, ensures cash keeps flowing in no matter what.
And what types of streams should investors focus on?
Investors can consider wholesaling to kickstart income, along with buy and hold strategies to create steady cash flow. Flipping is also useful during booming market periods for quick profits.
How should one adjust their investment strategies?
James advises adapting your approach based on current market conditions. Sometimes it's best to flip, other times hold long-term. Flexibility is key.
Any future predictions James shared?
James predicts the growth of new strategies like midterm rentals and tech-driven approaches in real estate as investors look for more passive income options.
Wrapping it up, what's the main takeaway?
The key is to build a resilient portfolio. James emphasizes that developing multiple income streams not only increases revenue, but also minimizes risk. So set sail toward a diversified investment strategy today.
Ahoy crypto enthusiasts! Welcome to Ryan Scribner's channel. Today, we're navigating through the turbulent waters of cryptocurrencies with a fresh take on 5 digital coins that could anchor your portfolio for life.
Exactly. With a wealth transfer revolution happening right now, there are countless opportunities on the horizon. But before diving deep, remember, investing requires significant homework.
What's the core thesis behind today's discussion? What can viewers expect?
Today's thesis revolves around the notion that as more people adopt cryptocurrencies, the potential for future wealth grows. However, investors must have a distinct risk tolerance to handle the inevitable storms in crypto markets.
Let's jump into the key points. What's the current landscape of crypto ownership?
Just 6.8% of the global population dabbles in cryptocurrencies, with over 14,600 millionaires created since crypto's inception. Talk about a digital gold rush.
Let's unearth the first contender on the list, Bitcoin. What makes it such a heavyweight?
Bitcoin isn't just first, it's the strongest player, commanding around 50% of the crypto market. Unlike fiat, it has a fixed supply of 21 million coins, making it a rarity.
Next up is Ethereum. What sets it apart from Bitcoin?
Ethereum isn't merely a currency, it's a launchpad for decentralized applications. Worth about 1/3 of Bitcoin's value, it's poised to reshape the way we interact with digital services.
Then there's Solana. Is it really the Ethereum killer?
Potentially. Launched in 2020, it's designed for high-speed transactions at lower costs, making it attractive for developers, a robust competitor.
What about Chainlink? How does it fit into the picture?
Think of Chainlink as the bridge between real-world data and smart contracts. Not only does it provide accurate data, but it has partners like Amazon and Google, enhancing its credibility.
Now, what predictions have emerged regarding these cryptos?
Many experts foresee Bitcoin entering another bull market following its recent halving event. With increased global adoption, it seems the price could soar.
And what about Ethereum? Any future insights?
Absolutely. As decentralized applications continue to grow in popularity, Ethereum's value could rise. Ethical projects utilizing blockchain are on the rise.
What's the big takeaway from today?
Investing in cryptocurrencies like Bitcoin, Ethereum, Solana, Chainlink, and Aave represents a substantial opportunity for long-term wealth. However, be warned, the waves can be choppy, and thorough research is key.
Any final parting advice for our viewers?
Always do your own research and only invest what you can afford to lose. The crypto seas can be unpredictable.
Welcome back, folks. Today's topic is all about the wild housing market and the roller coaster ride it's currently on. Are homes flying off the shelves, or are they staying put?
That's right. The latest insights reveal some intriguing trends in asking prices, inventory levels, and selling times. Spoiler alert, it's looking a bit bumpy out there.
So what's the core thesis of Jason's analysis of the housing market?
The main takeaway is that asking prices are flat while inventory continues to rise, leading to longer selling times. This suggests we're gradually moving towards a buyer's market, which could be a game changer for home buyers.
Let's dive into the key points. What's happening with asking prices?
Asking prices have remained relatively flat since February due to rising inventory levels and high mortgage rates hovering around 7%. Not exactly a sunny forecast for sellers.
And how about inventory levels? What's the scoop?
Inventory has increased a whopping 36.9% year over year. But here's the catch. We're still looking at about 30% fewer homes compared to 2019.
What about how long it takes to sell a house?
Buckle up. Homes are taking an average of 4 days longer to sell compared to last year. This trend has been consistent for over 11 weeks, adding to the suspense.
And let's not forget about price reductions.
Indeed, price reductions have skyrocketed by 46.4% year over year. It seems like sellers are starting to feel the pressure.
Looking ahead, what trends should buyers be aware of?
Buyers should keep their eyes peeled. Home sales are likely to remain sluggish, paving the way for a potential buyer's market. This could be the moment of truth for many.
So, what predictions are being thrown around regarding the housing market?
The consensus is a gradual shift towards a buyer's market. With longer selling times, we could see prices start to stabilize or even decline further.
To wrap it up, what should viewers take away from this analysis?
The key takeaway is to approach the real estate market with caution. With changing dynamics, buyers and sellers need to navigate these waters carefully to make informed decisions.
In this episode, we saw Graham highlighting the significant impact of the Federal Reserve's decisions on both the stock and housing markets.
Adam's alarming reflections on wealth disparity reinforced the need for social awareness in financial stability.
Mitch's revelations about property valuation fraud show a pressing need for transparency in real estate.
Jason urged caution for buyers while emphasizing the evolving conditions of the market.
Overall, experts stress the importance of adapting strategies to stay ahead amidst uncertainty. Thanks for watching Financial Insights in Minutes for August 1st, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.